The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time at 877-927-6648. Hey, what a session. This is going to be fascinating. I'll be looking at, now that we've got leg D in the S&P, what are we looking at here? Well, let's go through the numbers. And first of all, great programming, great shows. We're going to be going today, Thursday, all the way through until 6 o'clock. Hey, look at this. The SPY has gone to leg D. The S&P 500, leg D. The SPY weekly, leg D. Only a leg C in the monthly. So long-term, fabulous. Weekly chart, fabulous. Daily chart, that's going to be interesting. We've gone to a leg D, but at the same time, now how did that happen? The voice just went funny. Scratch, scratch, there we go. At the same time, the MACD just crossed positive and the stochastic jumped to 86%. Wow, now there's a conflict of interest. We're looking at, let me go through this one at a time here. Actually, let me run the numbers. Here we go. The Dow is up 100 at 20,154. And in fact, it went above the previous high of 155, 20,155. Then went to 20,162. Leg D in the Dow, daily. MACD is just barely crossed positive with stochastics at 85%. That's good, but much lower in a divergence than it was before. The weekly has gone very quickly from an A to a B to a C to a leg D. I'm always a little nervous about that. Let me go back here. Remember this? I said these rectangles, yellow rectangles, pertained to the stochastic running above, very nicely above 80% to the 90-something percent level, and then failed. And that I was anticipating, just like the Chapman wave falling axe starts to make quicker and quicker moves to the upside, we'll get to that in a moment, that we were in a rectangle with a very narrow, small base, and it just broke out to the upside without really breaking down. So this says to me, watch the stochastic. Well, stochastic's at 96%. The MACD is good. So far, there's no real signal in the weekly chart. So we have to say, okay, give parameters, because it's only parameters that's going to be of consequence here. Price is the arbiter of the trend, and the trend right now is making higher highs, all-time highs. However, what I am looking at is that there's a failure in the on-balance volume, and the stochastic, as I say, is at 85%, still very good, but not at the 90-something percent level that it was at when it made that peak E way back there with that silent candle, 20,125 and then 26, and on the 27th it had that silent doji, sharp pullback to 19,784. So I'm looking at this and I'm saying, okay, we're in an uptrend until we take out what? Well, really, you can say close twice underneath the 9-period moving average. This rectangle formation is such a key support level that I'd have to say to you, on a purely pragmatic look at this, just not trying to anticipate anything, I would have to suggest that a close under 19,784, that is 400 points lower than where we are, is really needed to demonstrate a sell mode in the daily chart, and even to get a sell signal out of the weekly chart. However, in leg D, a very quick ABCD, successively higher peaks that aren't extremely strong to the upside. If leg D, we haven't got a peak D yet. If leg D continues and it tests and then breaks this trend line resistance of 20,263, call it 20,260s, and goes to the 20,300 level by Monday or Tuesday of next week, that actually negates a lot of the negativity of the quick A to B to C to D, because all it would happen is, it's a big deal. You come back to today's low of 20,002. This week's low of 20,002. You see what I'm saying? The higher it goes, the higher the base. That's really the nitty gritty. So let's go on with the numbers. So the Dow has resistance coming up in this expanding wedge formation, and that would be, today would be 20,180, and tomorrow it'll be a little bit higher, maybe 82, 83. Okay, keep it simple. That's 30 points higher than where we are. Number one. Number two is, on a short-term basis, 20,000 is really the level to hold. Let's look at the S&P, SPX and leg D. And what's really important about this, it was actually an overlapping, but let's not get into that. It's a very quick A to B to C to D. And that says, same thing here, that it is in the area of being a very strong candle. But just make it real simple. At 2306, the support to hold is 2292, the 9-period moving average. The weekly chart. It hasn't bumped up against resistance yet. That resistance is that trend line right there at 2314. Excuse me, it's at 2306 right now. Leg D, very quick, A to B to C to D. Done that in the daily, done that in the weekly. And that's suggesting that we're getting real close to some kind of a pullback. I'm only calling it a pullback. I don't think it's a major signal yet. Where is the negativity? The negativity is in the speed with which we've gone from a peak A to a peak B to a peak C to a peak D. But I am going to emphasize once again, the sharper the height of this leg D, the greater you can raise the support level. Just keeping it as simple as possible. Yeah, we did take some kind of a cautionary stance this morning, small cautionary stance. We've got one particular Dow component, Dow ETF, that is up 26-7%. I don't know what it is. A very big percentage, huge gain in a short period of time. I don't think that's capable of continuing like that. So I'm anticipating that there will be some kind of a pullback, and we'll see what happens. Now, let's just go on here, because the S&P has very clear parameters. 2292 is support. 2316 is that trend line resistance in the weekly chart. Let's go to the QQQ series. Here we go, QQQQ. Very strong move to the upside. I have to call the QQQ a leg E in the daily, leg D in the weekly, and the weekly chart. I don't see any negativity at this particular point. You got NVIDIA coming out with earnings today. It follows this. I mean, it's leading this chart to the upside. Let's go to the IWM. Now, this is going to be really interesting. Why am I making a big deal out of this? Why am I making a big deal out of the stochastic and the MACD turning up here? Is it the start of a new move? Is GE, with Email giving a talk yesterday, giving some kind of something out of, is this a turnaround right here for GE? I'll talk about that in a moment, because I do not want to over-anticipate a down move when, in fact, it could recycle up a little bit more. I'll be right back. Basil Chapman, Tiger Conditions Hour, Dow's up 100.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC, equity and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So, we've got such great listeners here at TFNN. I get these questions, all the really good questions. This is what I'm looking at. So I had a quick question here about cyber, which is CyberArk, software security. A left side, right side price time match. Remember, I did this as an example of the Chapman Wave technique. There's the inside wedge, and it had us going by today, the 9th of whatever it is, February, going to 56.25, the former peak F on the 21st of November. Well, lo and behold, today we've spiked up to 55.54, also in an F, and the question was, is that an instant restart? Yep, it has all the characteristics of an instant restart, but there are a couple of techniques that I use in the Chapman Wave methodology that suggest that I've got to keep it in mind. So I'm going to put here as F slash, what will that be? It will be an F slash B, but it has the look based on some other characteristics that says it could go to a G and then pull back. So there's nothing wrong with it. It's been fabulous. It needs to break out. This is cyber trading at 55.09. It needs to break above 56.25 above the week of the 25th, that high. And that to me would be really good because it'll do two things. It'll establish higher lows and higher lows and higher highs in this particular framework. And it'll get you out of that channel resistance, the inside track resistance, and it breaks a major resistance line going all the way back from its all-time high back in June of 2015 of 76.35. Yep, I like it. It's a good stock, and I just wouldn't. The question was, as an instant restart, and my answer is based on certain criteria. I would have to say that it is probably going to pull back and go to one more high, which will look like a C, but it's probably going to be a G, and then it could pull back deeper into the 52s. That's really my thinking right now. Hey, a couple of things that we got going. I didn't finish. I want you to go to the gold. Look, gold is at, I did the IWM. Let me go in sequence. IWM, the reason why I'm looking at this and I'm saying, look at that. Stochastic is not great, but the MACD is really trying to create a positive up move. And I love the action here in the IWM, but I'm not going to say I love it. I almost wanted to buy it today. I I'm just thinking that this is an interesting move because you've had these series of lower highs and lower lows, and all of a sudden you're starting to get higher lows and slightly higher highs. And if the IWM goes above 136.98 to the 137s, as I said yesterday, I have to start considering that it is breaking out in the weekly chart in that down channel, like a Chapman wave falling axe. In fact, let me just be very strict about it. Let me put it like this, and you'll see what I'm talking about there. And this one has to expand a little bit, and there's your falling axe. That's an expanding wedge formation, and that's like a one-to-one to the upside. So I'm looking at this and I'm saying G/B in the weekly chart when the MACD and stochastic have just turned so positive, and then it pulls back and takes 1, 2, 3, 4, 5, 6, 7, 8 weeks, and it hasn't yet broken above the 138.82 level. If it does get to the 137s, there's a good chance that it could start higher. And that's the reason why I said we just took a little insurance on the short side, but I'm trying to hold back. I'm trying to be as patient as possible because there is a chance, based on many of the criteria that I'm looking at, that if longest peak C in history, well, not quite, but definitely on a daily basis. This is one long, well, it'll be a peak C1, C2, C3, C4, and then it'll break out and start like a D/whatever it is. Yeah, good point. Okay, now, so IWM, good. The New York Stock Exchange, NYA, it has to be moving up today. You remember down 100 points? Look at this, up 74 points. I said yesterday, 100 points for the New York Stock Exchange to break out. To get to its leg D, that's a lot of points. It's up 74 points today. So at 11,344.75, 1 penny higher than the high that was made in January, it starts leg D. And the MACD and stochastic are still very strong. There again, you had this huge decline in the MACD in all these different indices, and now the MACD is about to turn positive for so many of them. I have to tell you, this is the most remarkable market. Let's go through to the next thing, which I wanted to do, which was gold. And you've got gold trading. Any message? Yeah, we've got a bunch of quite a bunch of questions. So gold is trading at 1,236. It's only down 3. And there's your peak C. And I'm looking at this and I'm saying, I've got no other way to count it. I forgot to write it down. There was just this perfect example of a Chapman wave unconventional restart. A lot of words, but it actually explains. Let me put it in unconventional restart. And now I've got a question mark. What was it that I was looking at? It was a monthly chart or a weekly chart. I'll find it somewhere. But in the meantime, this is something that I could consider here in gold, but that says gold will go back to 1180. I'm not sure that that's in the cards right now. What I am looking at is gold is down a little bit. Silver is in leg D, above the 200-period moving average. We spent time on it yesterday. I won't spend time today. But this is going to be very important. The GDX has, in fact, made a peak E if there's no new high today. And it's got a doji top, and the stochastic's done exactly what you expect when you go suddenly up to the downside and sharply suddenly up to the upside, and then down again. You got to watch this closely at 92%. You don't want to see the stochastic plunge under 80% because that'll take the GDX, the gold miners ETF, underneath the 2321. Major support. So 2460 to 2420s is the key support on a short-term basis. That's the reason I spend a lot of time with my subscribers saying everything's been met, we've done it, but because we don't, the GDX, swing traders, I said yesterday, you could take a little bit off. I'd like to hold this longer. I think that gold is making a transition from that sharp down, 6 months or so, 5 months from the August high to the January low. I think that this is a potential for some kind of reinstatement of the up move, but a lot has to happen in terms of support. So I said, you got to make decisions about taking some money off. We've got everything that we wanted. One of our positions was up 30-something%. There's up 20. These are big percentage moves that we've had. You've got to look at gift offs in the mouth and say, hey, I'm in this for the longer term, but I do not want to sacrifice really good gains, and you've got to ameliorate that somehow or other, all right? So now let's go back to the market. We're looking at the high-grade copper. See, that's fading a little bit here, peak E in the daily, already a peak E. I have to put a down arrow now. In the weekly chart, because it's taken so much time, it could recycle, but that's the way it is. And still strong in the monthly chart. Now let's go to the crude oil. Crude oil, I've been a little sluggish in getting to these things. See, it's bouncing. What's what I've been saying, between the 51s and the 54s, maybe 55, there's just an up and down in crude oil. I just think it's for a short-term trade, great, but I don't think more for longer term. Now, I had some really good questions that I want to get to about the XRT. Look at this, the XRT, a huge move. Paul wanted to know about BBVY. And this should be up today. Yep, nice move. Good call, Paul. I'll be back. We'll talk about these in a moment. Dow's up 137. S&P's up 14 points. Basil Chapman, Tiger Technicians out. We'll be right back off you.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I didn't see that there were a couple of calls there. We're waiting. So let me just quickly say that Kevin, who couldn't hold on, wanted to know about, from Sacramento, wanted to know about EVH, which is Evolent Healthcare, Health Inc. is trading at 1802. I'm just going to say to you, Kevin, you obviously have been following this for a little while. It's not a great chart pattern, but it's a terrific move that it's had since the beginning of the year. And now it's just consolidating. If you want, at 1802, if you want to just start a tiny position, I would not hold it. 1735 is the stop. that's the clue. Because if instead of going down by Tuesday to Wednesday of next week, if it's taken out 18.56, that'll be really good action. So that's all I wanted to say, is that if you are looking at it and you followed it, if it was me, I would say I'm waiting. But you've obviously followed, you've brought it up for a couple of reasons, and I suspect that $18 is not a shorting stock. You're looking to buy. I would just say 1802, you could nibble. I would add to it on a break above 18.60. I'd add to it on strength. I would get out of it on weakness from here. In fact, I'd get out of it if it took out yesterday's low of 17.60. Make that clear. Let's go to Joe in Boston. Joe, how are you?
Basil, how are you today?
I'm well, thank you. Watching the snow, it's not nearly as bad as they said, but the day is young.
Yeah, they said more. It's going to get heavier today as the day goes on.
Correct. So you'd like to look at?
OHI, Omega Healthcare Investors. It's a real estate investment trust.
Now, it's so funny that you mentioned OHI, because I was looking at something in the REITs area that was acting so well. I just didn't think I wanted to buy it today for subscribers. And now you come up with this, and I'm saying, Omega Healthcare investors. I thought it was this is not a REIT. This is something else. What is this?
Yeah, no, this is a real estate investment trust. It's in the.
It is okay.
Healthcare properties and nursing homes and things like that.
All right, because the one I was looking at, I think, was also, and I'll show it in a short while because I don't know if I want to get in there. But let me just do this quickly. A, B, C, D, A, B, second, C, D, and even goes to an E. So this is OHI. You know, I thought that Steve usually gets all the symbols exactly right. I thought maybe this time he made a mistake and it should be OIH. Nobody ever asks about OHI. In fact, I've never seen it before. Omega Healthcare didn't even type it in by mistake, which is usually how I find these things serendipitously. So it's at 30.98. It's down 1.59. So your question pertains to what?
Well, a couple of things. One, on a fundamental basis, they announced earnings yesterday. To me, it actually looked pretty good, but the stock's down almost 5% today. So I'm kind of curious, what am I missing on that front? And the other thing is, this thing at $31 is about an 8% yield, and it looks like the funds from operations support that very well. So I actually do own this, and I have dollar cost averaged in recently, and actually I was at a gain, but I'm averaged in at right around $31, which my yield on cost is about almost 8%. And I was wondering if I should add to the position on this dip, or am I missing something here?
Okay, so let's do this, because you said that you look at this on a fundamental basis. I'm going to suggest to you that you keep monitoring it on a fundamental basis. I'm going to suggest to you just purely on a technical basis what I'm looking at and why I'm looking at it. When it closed yesterday, even today it had a big spike up early on and went to 13.12, and yesterday it closed at 32.57. That's a huge move. Okay, there are a couple of things that I would say to you. Because you've dollar cost average, but you were dollar cost averaging because you liked it, and you also thought that it, on a fundamental basis, it was meeting your criteria. My only question here is, do they have enough capital to make that dividend something that you feel somewhat secure about?
To me, it does, but I don't know if I'm missing something. I mean, they beat expectations on both earnings and revenue, and it looks like the funds from operation, fully support the dividend. The balance sheet looks good, so I don't know what I'm missing. I mean, on a technical basis, it had been looking, pretty good. If you look at the weekly chart, from back in November, it's kind of had a trend line that's gone up from 27.50 up towards the 33 range, had a couple of pullbacks. If you look on, that's on the daily view. And if you look on the weekly.
Weekly's good. Yeah, everything was in line.
Pretty good from that bottom in November. The only question is now on a technical basis, is this an ABC down from the August high of 36? It went from 36 to 27. It did about a 50% retracement here to 32, And now, is this going to be an ABC down on a weekly, or is this, is this just a pullback to the, to the 50-day moving average and a good buying opportunity?
Okay, so let me do this. I've got two things going on right now. One is it's made a peak E and it didn't break it even by 2 cents. It missed it by 2 cents. The high that was made right there at 33.14 on the 25th of January. However, I've got a D in place for the weekly chart, and that D was with good technicals, so the price has plunged under the 9-period moving average. What I am looking at is there's an H pattern in the monthly. So if you're asking me for my advice, and I'm not a fundamentalist, I'm going to say to you, on a sharp pullback like this, it's done it before. It did the same thing back on the 14th of December at 31.19. And then it had another down day, and then it turned around and went higher. I'm going to suggest to you, because you've got two positions and you're at about break even, that probably if you had, say, a 2% stop from here, it would give you about another, say, 60 cents or so, 60, 70 cents or 80 cents. Let's call it $1, right? I don't know if you want to risk $1 if there's going to be a turnaround to the upside, or you want to say, I don't want to risk $1. I'm prepared to risk $1 because if it takes out that dollar stop, I don't want any part of it. So I'm going to say to you, if it was me and I was looking at it and responded like this and that was so-called good news, I would probably say I want to lighten up at least a part of my position, just so that I'm managing my money properly. So I would take something off right here at 30.90. And if it does come back, if the way it's acting, you'll know that if it goes to 31.50-ish area by Monday or Tuesday of next week, that it's turned around. You could always add that back and say, you know what, that was just my security. I lost a little bit of money on that, but I didn't want to hold it if it was going to break under 30.50 or $30. But at the same time, I'm a little worried because it's made a peak D in the weekly chart, and the monthly chart would have been looking better, but it's not looking so good. So my instinct immediately is to say, you know what, take something off. And let's look at it again. Maybe today's Thursday, Friday, give it a day or two, maybe Monday or Tuesday. Let's look at it again for the remaining position. But I definitely would not get too carried away by holding it and just letting it go down, down, down. To me, that would be wrong. So be a little careful now. Take a little bit off, and then let's reassess in 2 days' time. Does that suit you? Is that?
Yeah, that sounds good, Basil. Thanks a lot for your insight on that.
Thank you so much for calling, and let me know how it goes, Joe. We'll be back with Ben straight after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I don't know if I have a chance to do this. This is a leg D, probably a peak D in the 10-minute E-mini. It's leg D, peak D it is already a peak D in the 5-minute. Yeah, I think that this is a very important period that we're in right now. Are there new investors coming in? We'll see. But most importantly, I wanted to get out of this. I wanted to show something. I had a question in the den. Close workspace. Yes. Go to the next one right here. I hope I can remember which one it is. It is not that one, but it is. Let's see. I think this is the one. So I had a question then about VRX. QQQ in the den asked about VRX. So I was going to have this this one right now. What you're looking at, XRV. We are long XRV. That's the S&P Select Healthcare Spider Fund, a long small position because I forgot to show this today. I did this last night. I did this and then I forgot to show it. That it should make a leg D in the daily. This is all daily charts, right? It just shows yes blank. This is with the stochastic. This is with the MACD, and this is with everything together. Not the point. The point was that VRX. I was going to do this. I was doing this the other day as a study piece. And then I decided, we've got other things that I'm doing. So I didn't want to add too many longs at that particular point, but it was going to show that VRX, which we had a fantastic lesson in earlier when I had my 3-part webinar series. It went from the entry point right there at about 14 something or other. It smacked up to the 17s in leg D. That was the lesson that we were going through. So I was going to add it again because I thought, hey, it's back in play, but there's a lot of things going on with approval, with earnings coming out in the next week or so. So I thought, okay, you know what, we've got other things. So VRX stop loss, all I can say is that if you're in it, just make your stop loss underneath yesterday's low, at least for now. And that is at $14. No, that's way too much. I would make it, you can even make it today's low of $14.66. I think it's working. Look, there's the stochastic, there's the MACD. And there's the whole thing together. Everything's working very nicely for that second U-shaped pattern. So I hope that helps you there. I should have had it. I had no reason. X was the other one. I almost spent time on it. We missed by 3. We would have missed by 3 cents getting into it, by 4 or 5 cents yesterday. And it's had a fabulous move up. So those are the lessons I like to give for my opening call subscribers. Yeah, we can't complain. We've got some nice things going, very nice things going on. So here's the thing. Let's go to Ben. Oh, Ben dropped. Oh, I forgot about Ben. You see, this is what happens. Sorry, Ben. I had you there, and I was coming back to you, and then I got carried away because everybody was asking questions. Ben was holding on, and he wanted to know about the GDX. What to do with the GDX? I bet that was the question. Sorry, Ben. I hope you're listening because I know sometimes you can't hold on, but you can listen. We are long the GDX from 2120. It spiraled up to yesterday's high of 2571. Hey, that is a a rare 4.5 point gain. It's a spectacular gain in a short period of time. You've got to expect that something's going to give back. So it is giving back today. And the question is what to do. All I can say is I don't know how much you've got, Ben, but my recommendation was to take something off, reward yourself for it. We have a half position. That's pretty good. I didn't really. I wanted to let it play out because the dollar, let me just go to the dollar to show you the relationship that I've got. The dollar is acting pretty darn well. It's not great, but the MACD has turned up and the stochastic is rallying and the histogram is improving. And I'm suggesting that I would like to hold on to the golds, because I think that, for instance, the gold stock that we have, which is up huge, 30% or something like that, it's holding. It should have pulled back. It's days young. It could still pull back. But I'm just a little concerned that I don't want to get out because it's going to be so hard to get in. If I'm correct that the weekly chart is showing that it's building kind of support that says, yes, it could pull back, but that it will go higher. That's really what I'm thinking about gold at this point. The way it's acted, just independent of the market, as if it's got both an inflationary and a kind of a fear factor going in there. I like it. So all I can say is that, Ben, I would just say to you, take something off that you want to put back. That's all. And you can say, if you want to know where would you put it back, I say, hold on a little bit. Don't be in a rush. If you're taking something off, you don't want to put it back right away. Give it a little time. Towards the 2350s, somewhere in this 2321 is the 200 period exponential moving average out of compromise. And let's say, look, you're getting out at 25. $1 means you got a dollar gain that you wouldn't have had. So you could put it back somewhere between 24.20 and 23.70. I think it might go down even a little bit more. I think there's a chance that if we do see the dollar rally more, you will see that gold will pull back. Now, I've got this funny thing going on because it's a leg C. And as I said, the Chapman wave unconventional restart would suggest that if it is an A, B, C, D, based on that their instant restart, this particular pattern says you go back and test the low. Certainly you test the low of D, which would be 1204.50, but actually there's a better chance that you go towards, not at exactly, but towards the 1182 low. So I just I said, let's step aside for the day before I can make some kind of decision about that. That's all. But in terms of the GDX, if you've got enough, take something off, you can always put it back on. Next question. So the BBB, remember I said that I think out of the BBBY, this is over about 2 weeks ago or something, I said to Paul, I think it's not looking good. Well, it went from the 41s down to the low yesterday, 2 days ago, of 39.09. Big move up at 40.53. So the question Paul has is, if I can find it, hey, can you look at BBBY? Looks like a breakout. So my contention was that BBY, Best Buy, was actually a better chart. Drop the B and go for this. And look, BBY is actually holding much better. I think that electronic area is better. So let's go to BBY. This is all those tsatskas that you can get in the, Bed Bath and Beyond. It's a place that I always do not relish going to, but I do it. So let's look at it and say, you know what, I think this is a balance. I don't think it's great. The monthly chart is not good. The weekly chart is not good. But there's a chance that there could be a rally. And if the rally in BBB, I don't know, Paul, if you are in it. If you're in it, wait to see if it goes above 41.98, closes above 41.98 on a daily basis. If it does that, then just the next step is 42.35. Just be really careful if by Tuesday, Wednesday of next week, you're looking at BBBY, instead of being at 40.49.96 or higher, it actually takes out the low of today. I'd be really careful. So then comes the question about the XRT. XRT, nice move up, leg C, very quick A to B to C, but nothing until this is the same as Paul. If it takes out the high of the 25th or the 44.12 area, it's at 43.78, up 77 cents. That's good. you really want to see it pierce and just decisively take out the 45.05 high of the 17th of January. That'll say, great. Now the monthly chart says, chop, 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 slight move to the upside, is back in place again. That's the way I would look at it. A one-day move is not going to make a big deal. But if there's follow through to the upside, absolutely it'll make a big deal. And look, this is a very strong move in Walmart. Walmart's a tell on this particular index. So Walmart needs to get from 68.89 to the 70.30s, and it needs to do it by Tuesday of next week. I'll be back with a lot more questions to get through if I can. Basil Chapman, Tiger Technicians Hour.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Yeah, let me just see if I've updated this one. Yeah, so that made a D, and I'd circled the D in the 10-minute E-mini chart, and I said that circle there should start to be the containment area, and that'll be support. If that support breaks, then you're looking at this. So let me give you numbers. So far, there's nothing negative yet, but if it closes under 20 on a 10-minute bar, if there's one close underneath 20, it's at 23.05. If it closes under 23.0250, there's a good chance that a little later in the day we'll test this area right here of 23.02, and that's going to be key. Breaking down under that would be negative. A move to 23.0650 would be really positive. That will just confirm this rally could go into tomorrow. Okay, now let's get back to the nitty-gritties here. Let me go all the way through from the questions coming in from early this morning. Let me go in order. XPD leg E. This is the broker dealer ETF, securities index. leg C is no other way I can count it. I can call it a G/C in the weekly chart. I'll put that in because there's one particular reason why I need to put it in, but it's a breakout in the monthly. It's in leg B in the monthly. That's really positive. I really can't call it E/B. This is a B in the monthly, very positive. So this is acting well at 221.59 up 362. The 218 to 216 area is key support. 223 to 224-ish would be the very strong resistance as I see it right now. The next question I had was MS, Morgan Stanley. Yeah, it's the same sort of thing. Morgan Stanley hasn't made its E, so we'll watch that. I had a question about the SMHs. So the SMHs, let me just put this in here. We actually have a small position short in the SMHs right at about this level, and a very tight at 1 point stop, buy stop. And tonight with NVIDIA, it could spike higher, and we're out of it. What can I say? And if it pulls back, NVIDIA, I think today's the earnings, right, this afternoon. Look, I've got alternate count here. There could be a stock that's done this. Very often, if there's even just a hint of disappointment, there could be a really quick pullback. So I'm just going to give you the numbers. It's at 117.65. If NVIDIA's not overnight, tomorrow morning by 10 minutes past 10, if NVIDIA is above 124, that is just spectacular, and it's just it's an amazing chart. If it's under at 117.59 right now, if it's under 113, it says watch out. NVIDIA has made a short-term top, and that's going to impact the SMHs probably. So that's that. That's another quick question. The XAL, nice move to the upside. See, this is the reason why I say I don't want to rule out the fact that we could be starting a new rally here. Nice move in the XAL. It's up 2.55% to 110.34. Good move. The airline index, the IYT, same thing. And transports, this is a new gray leg B. And remember, I said rectangle formation, the IYT, I think it's just stuck in range. Yeah, this is the confirmation of the range. So watching this real closely at 168.67. By next week, if it takes at 171.15, I have to consider that it's recycled to the upside. New leg A, B, new leg C. Wow. Okay, next question was Nike. Nike, spectacular move, up 3% at up 161 at 55.49. I consider there's a chance that Nike was making a hat-trick top when it made that top back in December of 2015. I'm still thinking that, but this is a fabulous move to the upside, but it is leg D in the daily and leg D in the weekly. It matches almost all the others leg Ds. So let's watch this closely. All I can say is a great move. The support now is at between 54 and 53.5. It really needs to get to that high right there of 56.12. And that'll be very important. Okay, I think we're running out of time. Folks, we've got great shows coming up all the rest of the day. Stay tuned. I mean, each person has fabulous techniques that they discuss right here at TFNN. Hope you check out my opening call. It's my daily, very comprehensive newsletter. We've had some very nice success lately, and you can enjoy it as well. I'll see you.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.